Hi, welcome everyone. Thank you so much for coming today. I'm really excited to be hosting these amazing panelists on what hopefully will be a very insightful and educational panel. So my name is Mahamad Tanahy, just Mo works. I'm the, so my background is mainly in entrepreneurship and product. And I'm the founder of Mindsalike, an entrepreneur and investor network, and currently also a founder building a fintech. We have an amazing group of panelists. Our first is Karima Hakim. Karima is the country director for Plug and Play in Egypt. So Plug and Play is a really active corporate innovation platform, as well as VC, investing in early stage startups. Karima also has worked at Fawri, Falak Startups, Orascom, and she's also a very avid golfer, I hear. Thank you for coming, Karima. Next up, we have Salman Butt. Salman's CV is honestly incredible. So Salman has built his own fintech, e-commerce unicorn in Saudi Arabia, which is Sella. Not only has he built his own unicorn, he's also invested as an angel in 4 or 5 unicorns in the region as well. So thank you so much, Salman. Finally, we have Vijay Tirathrai. I think I said that right. Okay. Vijay is the managing director and heads up Techstars in the MENA region. So Techstars is incredibly active early stage VC. So they, I think they've invested in 3,000 plus startups globally, and they have a portfolio of a market capitalization of 90 billion cap. At the same time, I think you've also Vijay was the CEO of multiple companies, family businesses in diversified regions, and he's based out of Dubai. Thank you for coming. So the main goal of our panel today is actually identifying what the secret sauce is to picking startups that you expect to be high growth startups. So I think I'm going to start off maybe actually sharing a bit of stats. I'm sure everybody knows this, but 90% of startups fail. Only 1% of startups end up becoming unicorns, unless they're with Salman, in which case maybe they're 7%. Salman, maybe starting with you, what is your secret sauce? How do you pick startups that end up succeeding?
Yeah, actually, not much into secret. Then myself, I'm a technical person. I don't see myself as an investor, but definitely at this stage I put my check in that counted as an angel investment. So that's why they put an angel investment under my name. But actually I invest in technologies with a focus of that the tech team of the startup is actually coachable, trainable, and they are looking for my personal 22 plus years of experience in tech instead of my money. So if that synergy I found it in any startup, I invest. Otherwise, other money is better for them.
Just to kind of follow up on that, because I'm really excited ethos that you have there. If the technology is great, and so that meets your criteria, is that enough? Or is there another set of criteria that you have to include?
The team must be coachable, and they are willing to learn something, to add, like to take from me to add to their knowledge. That's.
And as somebody technical, so I always feel like when you find 2 very technical founders, would you still invest if they don't have the commercial team or the sales part covered?
Yes. Because we both were tech. Me and Nawaf in Sella, we were tech. So I believe that if 2 techies are there and they are proper, they are coachable, they are willing to learn, definitely they will reach.
That's amazing. What about Karima? What's your criteria for picking high growth companies?
Okay, so basically, again, for us, I'll speak as plug and play first. So we are, again, we don't just invest in direct companies, but we also run programs. And a lot of the times, I like to find synergies, especially in emerging markets like Egypt, where we're here as an international investor, but also we are providing a program that is where you are here today. So we actually have a running accelerator and an incubator at the Sultan Hussein Kamel Palace, which is part of the Creativa Innovation Hubs. So in Egypt, I of course look for a great team, a technology that is at least at its early stages, but something that will be relevant, that will go to market fast, not just fast by a quick go to market, but that would actually work within this market. So we look at a lot of the times, and we have a mandate to invest in companies that have gone through the program, or at least facilitate this investment for them. As per my personal, let's say, understanding of sustainable businesses. So this is something I personally think, and I'm always very keen to tell the stories of the unicorns that Plug and Play invested in, that scaled out of their, let's say, homegrown countries, etc. For Egypt, I'm not someone that would champion the ambition of unicorn. I would champion an ambition of the camels, because they're more native to our region, and they're also more fair for the entrepreneurs. The camels don't need to be small caps. They can be $500 million valuation, even $1 billion. But the camels, they're here, they persevere, they survive. They actually look at sustainability of their business, but also the hyper growth is no longer something that our regional investors are looking for, just because we've been, let's say, matched with potentially companies that ended up not pursuing or not continuing due to their hyper growth. So just championing the word of I'm looking for a founder that has unicorn ambitions is something that I don't really do, but I look for really founders that have a camel ambition, a vision for the sustainability and the growth of their company in a stable way that is yet also native to our region, without this whole pegged to a US dollar denomination, and your value is not pegged to a denomination in a global currency that you don't operate in.
I think my 7-year-old daughter would still agree unicorns are more exciting, but
she's still your 7-year-old daughter.
Yeah, but how the unicorn will do in the desert? So
see, he's the unicorn guy.
No, it's a very good point. So what you're saying, Karima, if just to kind of paraphrase that, is that actually it doesn't have to be this unicorn status. You can go after a market that's big enough. You can build a $100 million company, $500 million company. It doesn't have to be that $1 billion as the only goal.
And this is the mentality that I'm seeking. So again, when you said what do you like when you choose the companies or the founders, these are the people that whenever I ask, they have to be ambitious, like super ambitious. But the ambition is not pegged to a valuation. The ambition is not pegged to $1 billion valuation. While we've seen in the market here, you've had big unicorns, and this is very public, I can say this, Fawri was capped at a $2 billion valuation, but they're publicly traded in the Egyptian stock market. So when the when the value of the currency dropped at half, for example, their valuation technically in EGP dropped. So is this fair for Fawri to say, like, we're no longer a unicorn? Blacks, actually, their value grew, and their business was doing tremendously, very well, because of the cash collection. So it's really the mentality of sustainability, keeping that business resilience. We hear this a lot, Aloha. We look for the resilient founders. Egypt has resilient founders, and the resilience is the camel mentality, I think. Just to
Vijay, the pressure's on you.
Yeah, of course. I agree with what Karima said. I think I would is sustainability and survivability over, let's say, creating a $1 billion company will be really the key consideration. So if you step back and you're looking at, say, pre-seed and the companies that we are investing in, we typically look at the team, the addressable market, the traction, the product, and I guess the idea in that sequence. We tend to over-index on the quality of the team. And what that really means is that, Karima mentioned about resilience. If you think about the top 3 reasons why companies fail in the first 3 years, number 1 is the dysfunctionality of the team. Number 2 is poor product market fit, and 3 is running out of cash. So if you reverse engineer that, and you said, okay, how do we prevent that accident from happening? You would then get the answers to your thesis as to how to invest in the right company. And so when we look at opportunities that comes to us in terms of pitch deck, and the line of questioning has to really follow that thread of thinking that how do we prevent that company from running out of cash? Can it get to market quickly? Monetization, acquisition of customers, obviously product market fit. But the team dysfunctionality is really hard to ascertain. And so for me, as in my role as a managing director at Techstars, the MDs are actually entrepreneurs. So I have 40 years of being in business, sort of 15 plus companies in 7 different industries. I think there's some limit to what data can tell you whether this company will be viable or not. And we rely a lot on data in terms of determining which is a good company. But finally, it's a judgment call. And it takes an entrepreneur to determine whether this entrepreneur will make it. There's a bit of a gut feeling into that. There's some degree of subjectivity. Well, guess what? It works. And if any angel investor tells you, and Salman is on my right, you can actually ask a lot of questions. You can look for the information. You can ascertain all the data. But ultimately, what's the decision? It comes from the gut. And I think that's a reality, particularly at the stage which we are in, which is pre-seed. And I think we typically would like to say that we over-index the team, but also to your question about high-growth companies, it's also about timing. And so if you look at the addressable market that company is trying to address, I've invested in companies. A good example is a flying car 6 years ago. It was a bit too early in its stage. And with the pandemic, it really caused a lot of pain. But they survived, thankfully, because the founders are outstanding. And today they are generating revenue with customers. So I think to see that high growth, to your question, is a little bit about the size of the market and also the timing of entry to the market.
Great. I mean, I think what I want to just, help the audience with as investors is actually something kind of like a tool that they would be able to use. Like, I know you're saying the team, that's the number one thing on over-indexing. The technical team as well from Salman, Karima, actually, realistic expectations based on the market. It doesn't have to be the biggest market. It doesn't have to be $1 billion market. You can go after something that you can build a $100 million company. But when you're evaluating them, do you have a tool that you use? Like, do you plug this all into an Excel sheet, have weighted averages for each one of these things? Like, how do you, stay objective when your gut might be saying this looks like an amazing company? I just want to make sure that I can control my objectivity. Do you have any tools that you would use?
So again, it's not a tech tool, but at an early stage, it's called your gut. I think again, when everything hits the due diligence, the numbers make sense and everything, early stage founders, to be honest, you're really looking for the actual beef, like how yani the meat inside that person, their resilience, again, without having to be too repetitive. You have now not Excel sheet, but now artificial intelligence and algorithms are now powering big VCs, and even internally people are looking for their portfolio management tool to be this. But when you come to invest before the portfolio management, especially at early stage, I think it's the human element that plays a huge role. And I can say this because I'm not a finance graduate. I graduated my master's in market research. I'm a bit not too uncomfortable around Excel sheets, but I have a very solid team that supports me in all this. They pitch to whenever there's like too many numbers, they go to the investment committee and champion this. So again, and I've had this imposter syndrome for the longest time, that I'm in VC, but I'm not technically like a CFA person. But again, I've been told by my mentors, early stage is not about the finances. Of course, the unit economics and the numbers need to make sense, but it takes someone that can just navigate some numbers to make sense of this. The human aspect is very important. And again, I'm not preaching for the program we have right there, but the fact that we spend 3 months or more with the founders, we stay in touch with them. Sometimes we don't invest right after they graduate or they finish the cohort, because one, we don't have the appetite to look at their sector or anything, but we remain in touch because of, again, the human element of this. And I don't want to say something wrong, but usually when it's people-to-people decision making, and and then I need to be convinced by them, because I champion them alone in front of the investment committee composed of the CEO of Plug and Play, of the family office that invests. So I need to be super excited and very, very, if not in love with the founders and the concept and everything, so that as a second party championing them, it sounds convincing as well. It's a very woman thing to say, I'm sorry, like it's emotions.
So just to build on that, I think there isn't really one tool that's out there that you can potentially use. I think we do use a combination of tools, the CRM and spreadsheets and all that. But really the tool is not the answer, in my humble opinion. Having said that, I do have a prediction that within a space of 3 years, 80% of what I do will be eliminated, or my job will be eliminated up to 80% by artificial intelligence. I think a lot of what we try to do is basically scrape data and try to process that. That can be done by machine. But that 20%, I think, comes from sitting on this side of the table. It's come from, when we say the gut, really it comes from experience. It's on a cellular level that you can really read the situation, particularly the body language of the founder, the team, the dynamics. That's pretty hard, I think, at least in the foreseeable future, to have that human intervention. That said, I just want to add one more point to, in the sense of how do we invest and how do you think about selecting a company. One key aspect is that I think capital, if we can say it's a commodity, it's widely available. Programs is also widely available around the world today, whether it's an incubation program, an accelerator program. So the key factor as a delta is I want to know if I can add value to the deal. So it's not the capital, not the program, but can I really help these founders take it a notch or level higher? And that value creation is really where the key difference is, and that's the importance of how that decision will be made. So you've got two companies, A and B, outstanding entrepreneurs, great products, different markets, but in one particular scenario, I can make a difference, I'm more likely to invest in that company.
So you touched on AI, and something that I really wanted to ask about is, like, at the moment when you're deciding, and Salman, you mentioned, the technology, that's a really important part for you. So at the moment when you're investing, are there certain technologies that absolutely have to be there? Like, do they have to be AI driven? Do they have to be using blockchain? for them to be high growth companies in the next 5 years, especially in our region. What do you think of that?
Yeah, the point when they come talk to me, yeah, lots of them talk about AI, blockchain, lots of ideas. But the reason I sit with the tech team to understand how much of AI is there. Is there an if continually statement and that's an AI in their opinion? Or it's an AI based on the public? Or it's a real AI, so something really thinkable machines or something. So these differences are actually what drive my decision. So I don't believe on if we say there is a wave, as you said, of AIs and blockchains and lots of these solutions. So it's not about jumping on and trying to do something for the fashion or something. No, there must be some meat, as Karima said. There must be something have been done, which is actually a thing that's going to help people. So the solution must be there. And definitely they have been targeting some problem, specific issue they want to solve or adjust or fix in the society or in a very specific segment of people. Definitely it's a normal thing. So it's not like you just build some fancy codes and you expect that Salman going to give you your first check. It's not like that. So there must be something the technology is doing to the people, enhancing their life, fixing their issues, actually will be doing some good somehow. So that's the thing.
Would you, there was a joke, I think, in Silicon Valley that like all the pitch decks that came out of 2020, which all had crypto, they just took off crypto and put on AI. And then those became the new startups, which is hot now. But would you invest in somebody that's kind of built a hammer looking for a nail? Which is like they've created some amazing technology. They don't know how to use it yet, but they've created something interesting. Would you invest, or do you have to start with the problem?
For me, it's a clear, the latter. So I'm not interested in the solution. I'm interested in you, the entrepreneur. What are your insights? What is your understanding about the problem? And do you have sustaining power to basically, solve that problem to the very end? The solutions in a product can be innovated along the way. So I'm 100% more about seeking founders who are obsessed about solving a problem so it's not really the case of a solution looking for a problem.
There is a case, a small case, I'm going to mention that. It's like stories usually stick in the public's minds. So the startup came to me, they were very close friends even before we start Sella. And I asked them to sit with the CTO and the tech team. Again, the CTO and like one of the core developers were also old friends. So they all came and they exposed the technologies they have built. They were trying to build a software solution for some legal area. And they are very successful now, by the way. But when I saw the technology, I saw a layer of the technology. I named it as a black box. So I told them this will be the black box that I will be investing in, not the technology, not the whole startup. So you take the startup anywhere you want to go. But this black box, I'm going to use it in plenty other startups. So they built a technology as a base for them to reach out for one product, where I could see plenty products can be built above that layer. And just like a week back, we started communicating for another startup to build above the same layer, and they will be holding an equity while they are still struggling in the growth areas of their own startup. So
I think that's really great, because that's actually you as an advisor or as an angel investor helping the techies who have built something really good find new applications and commercialize their product, right? So that's the value that you're adding to startups. That's amazing. Karima, I feel you want to say
So
something.
on AI, again, we're sector agnostic, but if I were, again, I'm speaking as per myself, if I were to invest in a company building something for AI, it would be for the first Arab or Middle Eastern founder that would build our own foundational model to build on. Because at the end of the day, which is one of the most expensive things, no one actually wants to build a foundational model like GPT, etc. But that's what we're lacking. So if there would be any concentration and hyping up the artificial intelligence companies, it's to ask the founders who are actually wanting to build something that would be valuable for our region, is to build our first foundational model that speaks Arabic, or built at least without any data gaps or biases in them. That said, in our portfolio, for example, a lot of companies are either AI consultants, so they actually do AI work and develop artificial intelligence models for big corporates, but at the end of the day, it's very consultancy work. And there is no such thing as it must have artificial intelligence embedded to it, or else we won't invest, because these are features. You can always go collaborate, you can have that idea. And again, if you're not changing lives or not making impact, maybe you should be working for someone or developing something that would eventually do that. But again, the biggest investment that we can all put in the region is to look after the team or the big company that would build the foundational model from the Arab region.
Okay, great. I would love to see driverless cars trained in Egypt, though. This is the AI that we need. Yeah, we need the flying cars in Egypt. That'd be great. So to the next part. So how do you source your deals? So as an investor, you know, what is your tricks to find the best deals, and how do you source them?
So I think we are very fortunate. For example, last year we received about 27,000 applications globally, and we go through each one of them. But we only invest in 700 companies. That's like 0.25%. And what that tells us is that we have a lot of organic momentum because it's the brand that we've built over the years that people tend to keep coming back. We've got great testimonials from the alumni community. So we do get a lot of unsolicited interest for investments and our programs. But having said that, I'm here in Cairo, for example, today and the next couple of days, is really to engage with the ecosystem, because it's through that engagement and through referrals, you tend to get really good entrepreneurs, or you get to know good entrepreneurs who might be a little shy to apply themselves. They need a bit of a nudge and convincing. So engaging with the community is really a way to do it. And I think, you know, ultimately, the true test is when you have successful founders who actually have gone through the investment programs that we have at Techstars, exited, raised, you know, having raised successfully and exited, and then reinvesting in the community. That is really when I think the magic happens, where it becomes organically driven in terms of getting applications.
Yeah, I believe that being around the community, getting yourself involved, networking with the different players. Like, I'm entrepreneur in residence with Techstars. I'm also a mentor at Code initiative we have with MCIT. So being there is actually what brings people. Yeah, I could say it's organic, like everybody reaches me through LinkedIn, but definitely it happened because I am involved in the community, as Vijay said. So I believe the networking, being involved, being around, and such events definitely going to give us leads.
From our side, just to anticipate your question, again, I think Salman is the luckiest one here because he's a founder, and I think founders are, for me, per se, the most straight up pipeline for a VC, especially founders of your own portfolio, because they remove the issue of portfolio conflict. So whenever they would like champion another founder, one, for sure this is not or he or she are not a portfolio conflict, and two, it builds again a better dynamic of the portfolio, and they understand you already, so they know your value. When they champion another founder, it's also because they know you'll support them. And I think founders really want to support other founders unless they're really direct competition, which is sometimes not even an issue, because in the region, let's say the pie is big. A lot of the fintechs, everyone has like clashing milestones eventually, but founders referrals are the most probably spot on, especially the founders from your portfolio. It's not a cohort referral as much as it is a portfolio referral. So keeping tabs with your portfolio, engaging in portfolio retreats. This is something, and I'm criticizing ourselves now, something we haven't done yet, but I feel like it's a good investment to have.
That's a very good point. I think we're out of time, but I do want to ask a very important question, which is, how do you rate your success? So, you know, you've invested into your portfolio, 20, 30 companies, whatever companies you're investing in. How do you decide, okay, this is my success criteria for you as an investor?
That's a simple one, because our success is the success of the founders. So when we look at our portfolio, I would say that, you know, in the first 5 years, you know, 80% of the companies are still active and running, which is a pretty high number, inversely proportioned to the market, which is 90% of them will fail. The second metric is really the amount of money they are able to raise within that time frame. That is also a measure of success. Not necessarily exits, because that takes a much longer time frame, but the ability to raise capital and the survival rate are two metrics that we're very proud of, that they've done extremely well.
For me, it's a journey, but definitely because I'm like early checks, so I believe around after me, an institutional round, that I count it as a major milestone.
Finally, I'll be very, very quick. I think globally, our success has been measured by being awarded one of the most active, or the most active last year VC in early stage startups. The previous year, maybe the third most active in the world. But in Egypt, I feel this is where we might be averaged. And this is not due to anything. We're just 2 years in with an office, but we also need to localize and be a bit more flexible given the nature here of the companies we can invest in. So the incorporation, the flip, and all this, we need to be a bit more flexible from our Silicon Valley Investment Committee, especially in markets where we might be a bit demanding for very early stage, but still expect them to have a governance of a company that is expected to, you know, have a holdco, and the holdco owns the opco. So we need to be a bit more flexible, and I think I'm starting to champion this a little bit more. The more we actually miss on deals, so the more we miss on deals, the more I can get myself heard internally, and I think they're catching up. So inshallah.
Vijay, Salman, Karima, thank you so much. I hope everybody enjoyed the panel, and enjoy your night.